You have done the research. You understand what private banking offers. You know the advantages, the investment access, the protection, the geographic diversification, the sophisticated lending that a retail banking simply cannot give you. And now you have made a decision. You're going to open a private bank account. The question is no longer whether to do it. The question is, which bank do you choose? And how do you make sure you are choosing correctly? Today, I'm going to give you the complete framework from verifying that the bank you are choosing is legitimate and licensed, all the way to the 6 questions you must ask before you sign any papers. This video is going to save you from the mistakes I have watched clients make, sometimes very expensive mistakes, simply because they did not know what to look for. My name is Real Wealth Insider. I have been working inside private banking and financial services for 16 years. I'm going to tell you exactly what the best clients do that most clients never think to. Verify the bank is licensed. Before you do anything else, before the first meeting, before the first phone call, before you even look at the brochure, you need to verify if the bank you are considering is a licensed, regulated financial institution. In Switzerland, the regulatory body is FINMA, the Swiss Financial Market Supervisory Authority. FINMA is the independent government body that licenses and supervises all banks, security firms, insurance companies, and other financial institutions operating in Switzerland. If a bank is not licensed by FINMA, it is not a legitimate Swiss bank. Full stop. Here is what you do. Go to FINMA's official website, finma.ch, FINMA.ch. Find FINMA Public. Click Authorized Institutions. On the same page, at the bottom, there is a list of banks, both in Excel format and PDF format. You download the list, then you search the name of the bank you are considering. If it appears under the list, it is a licensed, regulated Swiss institution. It is subject to Swiss banking law, Swiss capital requirement, Swiss anti-money laundering regulations, and the full financial supervision. If it does not appear on the list, walk away immediately, no exceptions. There are organizations that present themselves as Swiss banks that are not licensed by FINMA. They may have Swiss addresses, Swiss sounding names, and impressive websites, but they are not on the FINMA's authorized list. They are not regulated Swiss bank. Do not proceed. Oh, you may also find this warning list on the FINMA's official website. Those lists, those entities on the warning list, they are not authorized, regulated financial institutions. This single check, which takes approximately 3 minutes on FINMA's website, is the most important due diligence step in the entire process. Do it first, every time, without exception. For banks operating outside of Switzerland, Hong Kong, Singapore, Luxembourg, the UK. The equivalent regulators are HKMA in Hong Kong, MAS in Singapore, the CSSF in Luxembourg, and the FCA in the UK. Every serious financial jurisdiction has an equivalent public register. Always check it. Part 2, minimum thresholds. Now you have confirmed the bank is legitimate. Check the minimum thresholds. This depends on the type of mandate you are going to choose, and it also depends on your entire financial background. In general, at the entry level, some private banks accept clients with as little as $250,000. The sweet spots where the majority of genuine private banking relationship begin is between $500,000 and $1 million. At the top tier, the big banks require a minimum of $5 million or more. The inside knowledge. The minimum is just the starting point. What banks care more about is your future earning potentials, not your current balance. A 40-year-old with 400,000 today and a growing career is more interesting than a 60-year-old with 1 million who is drawing down. The banks think about next 20 years, not just today. Part 3, how to approach a private bank. Never cold call a private bank. The entire private banking world runs on introductions. Your accountants, your lawyers, and existing clients of the bank. And warm introduction opens every door that money alone simply cannot. If you do not have a direct introduction, find a financial intermediary who specialize in private banking introductions. They exist specifically for this purpose and are compensated by the banks, not by you. Part 4. The 6 questions to ask before you sign any papers. Most people arrive at their first private banking meeting as if they are being interviewed. Flip the dynamic completely. You are interviewing them and ask them the following 6 questions. Question 1. What is my total all-in fee? Not just the management fee, all-in fee, including management fee, transaction fee, custody fee, and product margin, etc. Ask for a single number. Most private bankers have never been asked this question directly. Question 2. Who will be my relationship manager? And how many clients do they personally manage? If the answer to the number of clients is more than 100 and 150, means you're just a number in the system. The relationship manager couldn't have enough time to handle your account. Question 3. What is the investment philosophy of the bank? How does the bank handle conflict of interest? Ask directly. Does the bank earn higher margins from its own in-house funds versus external ones? This answer tells you everything about how client-centric the institution actually is. Question 4. What are the bank's lending capacities? Even if you have no intention of borrowing today, ask about Lombard loans, credit facilities. A private bank that cannot offer sophisticated lending is providing you with a half of service. Question 5. How does the bank handle multi-jurisdictional clients? If you have assets in more than one country, ask specifically about cross-border expertise. Do they have specialists in your home country's tax system? Question 6. What happens if I want to leave? Can I transfer assets easily? Are there any exit fees? How long does the process take? A bank that makes it easy to leave is genuinely confident in its service. Part 5. Due diligence checklist. Beyond the 6 questions, there is a due diligence process you must complete. Step 1. If it's a Swiss bank, you must do FINMA verification if this bank is regulated and licensed by FINMA. Step 2. Credit rating. If you are considered a bank outside of Switzerland or a small institution not FINMA regulated, check its credit rating from Moody's or Standard & Poor's. Investment grade or above is a must. If you cannot provide a current credit rating from a recognized agency, treat this as a serious warning sign. A financially unstable bank puts your peace of mind at risk, even if your assets are technically protected. For Swiss banks, FINMA verification is your primary check. Credit rating provide additional confidence, but are secondary. For non-Swiss banks, credit rating verification becomes essential. Step 3. Verify deposit protection. In Switzerland, the first 100,000 Swiss francs per client are protected. In the UK, the first 85,000 pounds are protected. Your private banking assets above the threshold are not covered by the deposit insurance. This is why the bank's credit rating and regulatory standing matters so much. Step 4. Ask to speak to existing clients. Any private bank confident in its service should be willing to connect you with existing clients with appropriate confidentiality. If a bank refuses entirely, ask yourself why. Step 5. Understand the ownership structure. Is this bank a publicly listed where shareholder returns may conflict with clients' interests? Or is it a partnership where the partner's own wealth is directly tied to clients' success? Partnership structure generally align interests more cleanly. Chapter 6, the red flags. Flag 1. The bank is not the FINMA registered. If they're not on the FINMA list, authorized list, leave. This is non-negotiable. Flag 2. A bank who recommends products in the first meeting. Before understanding your complete financial situation, no credible private banker recommends specific investment products. This is a sales behavior, not an advisory one. Flag 3. inability to explain fees clearly. If a banker cannot give you a precise breakdown of every fee, walk away. This is not complexity. This is deliberate opacity. Flag 4, pressure to transfer all assets immediately. Any banker who pressures you to consolidate everything on day one is prioritizing their book of business over your interest. Flag 5, no clear investment benchmark. If your banker cannot tell you clearly what index your portfolio will be measured against, they are creating a situation where underperformance is impossible to prove. Flag 6, a relationship manager who never pushes back. The most dangerous banker is the one who agrees with you everything you see. A yes man is not a financial partner. They are a transaction processor. Part 7, recommendations. Recommendation 1, always check FINMA authorized list first. It only takes you 3 minutes. Recommendation 2, never choose a private bank based on its name alone. The relationship manager is everything. Interview the individual, not the institution. Recommendation 3, start small. Transfer a portion of your wealth first. See how they perform, how they communicate, and how they handle problems before committing everything. Recommendation 4, review the relationship every year. Request an annual performance review. Compare your natural fees return against a simple benchmark. If they cannot beat a no-cost index fund after fees over 5 years, you should have a serious conversation with them. Recommendation 5, always have a second opinion. Use an independent financial advisor to review major investment decisions. The best private banking clients are the most informed ones. Uninformed clients is a protected clients. Choosing a right private bank is one of the most important financial decisions you will ever make. The framework I have given you today, starting from FINMA verification, ask the 6 questions, completing the due diligence checklist, and watching for the red flags, give you everything you need to make the decision correctly. The right private banker is not a salesperson. They are an honest, knowledgeable professional who sometimes tell you what you do not want to hear because they look after your interests, not theirs. That person exists. This process helps you to find them. If this video helped you, please subscribe. Share it with someone who is at this stage of financial journey. Leave me a comment below. I read every single one. I will see you in the next video. In the next video, I will talk about the documents and steps for opening a private bank account in Switzerland.